Hi everyone, welcome to episode 17 of the Startup Playbook Podcast. My name is Rohit Bhargava, and each week I interview successful founders, investors, and subject matter experts on how they got started, the strategies they use to succeed, and their advice to current and future entrepreneurs. In this episode, I interview Tom Ellis. Tom is the investment director at Mai Capital, a $20 million fund that specializes on startups wanting to expand into the Chinese market. Prior to his role with Mai Capital, Tom was the Director of Business Relations at Crosstivity and spent a number of years in corporate banking, including co-managing over $1 billion before he was 21. In the interview, Tom shares the importance of being coachable, the importance of solving problems, what he looks for in investment opportunities, and the opportunities for startups in the Chinese market. Without further ado, here is my interview with Tom Ellis. Hi Tom, welcome to the Startup Playbook Podcast, and thanks a lot for taking the time to be on the show.
Thanks, Rohit. It's great to be chatting, I guess.
So for those people that aren't that familiar with you, can you give us a brief overview of your background?
Yeah, great. So I'm currently the investment director at Mai Capital, a venture capital fund based in Melbourne. But I guess the more interesting part is what does that mean and where I started. I grew up in rural Victoria, so I'm a country boy, and was sort of the kid at high school selling cans of Coke and Mars bars out of his locker, always seeing a different way to sort of make a dollar out of opportunities. I moved to Melbourne and finished my high school years and started, funnily enough, a business in nightclubs. I probably can't talk too much about that, being still at school at the time, but it was definitely a way of seeing an opportunity around connecting people from in and around a market that wasn't really being addressed. Went to university, so started studying at Monash, and proceeded to kind of balance events, marketing, those sorts of things, a couple of part-time jobs and a full-time study load. And in my final year of university, worked on a project to raise around $150,000 in cash and in-kind sponsorship for the university, which was a phenomenal experience and really got me, I guess, thirsty for delivering value and solutions in a way that isn't necessarily done just by working in a corporate. I then went and travelled the world, became a professional scuba diver.
Wow, that's interesting.
Yeah, and did a bit of work with, I guess, what we would here call startups, but companies in Indonesia that just purely from a market and fit perspective around that sort of messaging and sales. Started working in banking, was accepted into a graduate role with the Westpac Group, which gave me a huge amount of exposure across different asset classes, from credit cards to home loans to multi-$100 million syndicated debt. I was fortunate to work as part of a team of 4 co-managing $1 billion before I was about 21. And that included caption names like Spotlight, Regis, RSCA, which were private equity sponsored or large family office owned companies. I can probably talk in generality about that, but again, I was part of the team. It wasn't that I was out originating the deals. I guess that as part of that, we also launched Bank of Melbourne. I was part of a project team along with a horde of others, but that gave me personally exposure to change management, lean thinking, some of the methodologies that in broader startup communities we talk about every day, but it's sort of come out of that Six Sigma thinking and some of the methodology around that from a project and implementation perspective. I was then part of an acquisition team with a focus on new business. We wrote sort of record-breaking numbers in the time I was there, and funnily enough, as happens in banking, after a number of years there was a restructure. So I moved to CBA and was working in their corporate mid-market, so looking at private equity backed pre-IPO kind of opportunities. And by that time I'd sort of been in banking for nearly 4 or 5 years, and it was very similar. I was really looking to go from telling to doing. I felt that the skills I'd got in there were fantastic. I can read and write all kinds of financial analysis, but the things I loved were spending time with the directors, the shareholders, and the founders of these companies. Retail Zoo was a client of ours. That's Boost Juice, Salsas, those kinds of people. It was pretty phenomenal watching these people grow things, and I was fortunate that I was in a capacity in banking to use debt to assist with growth. I went from banking to an early stage company called Crosstivity. So I'd founded my own company as an advisor to really do rather than tell. But Crosstivity was the first one that I really got stuck into in a meaningful way. That was founded by a couple of guys who'd had some really healthy exits previously, both in Australia and Europe. Joel Interman is one of the founders from there. He is a really great technologist, strong product lead. Vincent Brendel was one of the lead developers along with Sam Richardson. So Vincent was part of the team from Bugherd, so that's Alan Downey's company. And Sam had a number of sort of successful forays into technology development, being funded by Angel Cube a couple of times. So it was a really, really great, I guess, cohort to go into, and came in as the Director of Business Relationships after doing the initial legwork, sort of building out the decks and sort of assisting with sourcing initial capital. We took that from probably an overbuilt MVP into a solution that really matched the need for marketing people. It was a marketing workflow solution, and it was built around the need for visibility, transparency, and measurement across marketing. That we saw huge wastage in that space. I'd seen it as a lender, when we'd sort of look at balance sheets or P&Ls and people had this big spend but weren't able to quantify where it had gone. Crosstivity was built around that thesis. It was a Rails back end and an Angular front end. It was phenomenal tech. And we took that from a couple of guys in an office in South Yarra to initial clients to validation to capital rounds. And ultimately one of the founders and shareholders sort of bought everybody out. It was an interesting experience. I'd always expected that to take a far lot longer than it did. Look, I'm not going to retire on it, but it was great to work with some really interesting people and to sort of take an idea that really had that was an idea initially and sort of beat it into shape with product market fit, initial traction, and going through the process of tech audits from some of the biggest companies in Australia was it's definitely eye-opening, and not something I was doing if I had have stayed in banking. From there, I was doing some advisory work for, I guess, family offices or large private families that were looking to invest in startups, and a few ventures as well from a sales and delivery capacity. I've proven that I can open doors and really get people to sit down and look at opportunities, and that's a skill that I didn't really acknowledge until I was doing it. But I did that for about 6 months, unfortunately under confidentiality on a couple of those companies, but a lot of them are doing very well now. And then Michael Mai, the managing partner of Mai Capital, got it. My CV sort of ended up across his desk through Stephen Marbani, who was the partner of PricewaterhouseCoopers for venture capital. And we caught up, and we have very similar values around people, value, and growth. So over a sort of period of weeks, we got to know one another, and he asked if I'd come in and do some of the work that I'd been doing in the open market for him. And that's transitioned into an investment director role at Mai Capital. I guess that's kind of the really long-winded story.
Well, it's a really diverse background, and I really want to come back on some of your experiences, particularly with Crosstivity and what you're doing now. But just looking back to your first business that you mentioned, it was really interesting for me because I had a very similar business that I first started when I was at uni. But without going into too much detail about what it was, what it did, what were some of the lessons that you learned from that initial foray into the startup land?
Yeah, great question. I think for me it was that the importance of approaching a problem differently will always give you an edge. And I talk a lot, if anyone listening has sort of sat down with me, about problem-solving behaviour. And I've always seen it, particularly coming from rural Victoria, the lens of if you solve a problem, you create value. Rather than another coffee shop, you've got to be a better coffee shop. And what does that mean? And I guess for me it was about creating experience. And the learning was that psychology is such a huge part of business, and that people want to belong and be part of these great businesses. I think looking at things that people I know have founded. Frank Body, is something that's been cultivated off the back of experience. There's phenomenal things that sort of go with it beyond just the object. I think that was kind of the biggest learning in there. Also that you don't need to be old with grey hair to solve a problem. I think that was kind of the biggest thing, is that if you set your mind to something and you see that something can be solved better or differently, the only thing stopping you is you and occasionally capital.
Sure. So in terms of like taking that kind of mindset, and one thing that I know a lot of startups struggle with is raising those initial funds, and you were able to manage to raise 150k as a uni student. Can you talk about what sort of psychology you used? What were some of the things that you used to kind of raise those funds?
Yeah, great. I guess part of it is that it wasn't just capital; it was in kind as well. And we had some really great partners. But I guess as a uni student, to open the doors to the likes of Telstra, Fonterra, Mars, they're kind of big caption names. The biggest thing is to ask, and the great thing about doing that within the environment of a university was the ability to ask senior stakeholders of the business for referrals. So I look at the decks I did now, and it's highly, highly embarrassing. But it was through iteration and practice and really coming up against great advisors that could say, that's crap, do it again, rather than, just go and do it. I think the important part is believing in the initial concept, but then validating it beyond friends and family to people that will give you serious feedback. I know I do a lot of that now. We can't always give capital, but I will give people direct feedback on what it needs to look like for it to be fundable either by us or by someone else. And I think that the biggest part of that is listening and really understanding the need of the person you're trying to either sell or interact with. For these big companies, it was access to the best talent that a university had to offer. We had to create an offering around that and structure it in a way that it would be appealing to a global company. And I think the other piece is understanding where you sit in that sphere is that it's not an essential part of that person's day, but you've got to capture the moment enough to make them interested and to get another meeting. The biggest thing that I think people need to understand is that it's not a sale, it's a two-way conversation, and you really need to create value and generate something that is beneficial to both parties. Otherwise, there is no point sort of asking for the meeting. Absolutely.
And so I'm just trying to track through your entire career here. But so the next phase, you're in sort of corporate banking, and then you're sort of transitioning into startup space or starting your own thing. What instigated that change for you?
I guess at the time, people always looked at it as kind of, this doesn't make sense. But for me, it's that I've always been about growth. I've always been about early stage companies, and I've been very fortunate to be exposed to some phenomenal entrepreneurs throughout my life. And I think that part of it was leaving university, I needed to build something that was strong and robust. I think you've spoken to Paul from Rampersand, and he sort of touched on it with having to corporatize some of his experience. Well, that's what I heard from him, but it's that the mentality was always there, but being 20, no one was going to take me seriously as an advisor. So I needed to get some fundamental skills and capabilities that were recognizable in the market. And banking is phenomenal for that. So is consulting. So is any, I guess, structured bureaucracy that gives you a lot of the things that people, rebel against. But the fundamental baseline then is understanding corporate communication, understanding how to sell from that side, and also how to facilitate value internally. You really need to manage some challenging conversations with your stakeholders when things go wrong. And I think that was something that was a huge asset from coming out of that environment. Is yes, I've lost money. I've lost as part of myself and corporations. Understanding what that feels like and the ramifications for the other people involved is something that I think is really important. I'm not that old, but I've experienced, through these great organisations, some of those challenges.
Sure. And I mean, one of the things that I think in the startup space we tend to do is really discount the experience or the skills that corporate brings to startups. And I know something we were talking about a little bit earlier was the kind of the hoodie mentality and kind of discounting the business side. Can you talk a little bit about some of the skills or expertise that you were able to learn through that process, or what you think startups can learn from the corporate space?
Yeah, I think that's a really great point, and it's something that I speak about a little, quite often, and it's probably the importance of knowing your audience and working. If you're in a nightclub, your audience is different to what it is if you're trying to put on an event at the MCG or open a restaurant. I have friends that have done each of those things, and some of them that have done all of them. And it's around, I guess, being appropriate. And I think that the piece I like to touch on there is, I've heard people talk about going to startups like, I'll go there for a few years and I'll go back to corporate. Some of the best founders I know are on their 5th or 6th startup, or early stage company. It's about solving a problem and really honing in and refining what that looks like. And people talk about pivots and they talk about lean methodology, and you can have every buzzword in the world. But for me, that the piece that came out of being a banker was the people we helped grow were great at something, and they really owned a vertical, and whether we used debt to structure in something so that their offering could expand or they could go overseas, it was really about being clear. And I think that what was drilled into me was the importance of being good at something, and I talk about that particularly when we take companies to China. There's the importance of scaling something locally in Australia and owning a vertical before we can help take that to the next level. I think that the most important part about that is not saying your market size is 10 billion and you're going to get 2% of it, but saying who your first 35 customers are going to be, how you're going to get to them, and how you're going to get a greater share of wallet, particularly if you're doing things that require virality internally. I think it's really vital to understand how you reduce churn, how you create that value proposition so that your clients are advocates.
Absolutely. And in terms of those things, I guess you've now transitioned from solving problems yourself and starting businesses to now looking at other people that are trying to solve big problems. What has your perspective changed at all, being on the other side?
Yeah, definitely. I think part of where I'm unique is I've sat most sides of the table, none of which for very long, but I've been an investee, an investor, a banker, so a debt provider. We've worked getting rid of companies when things go bad, disposals, acquisitions. I think there's a wide range of things that I've done, which means that I can be a bit more holistic and ask some questions, not just from one sort of specificity. I know that's sort of counter to what I've just said, but as a venture capitalist and sitting in this chair, I'm the voice of a panel of advisors, investors, partners, and my strength is knowing when to tap them and when to sort of pull them into an opportunity or to help out. And I guess that's always been my strength. And where in the early stage environment it's important is knowing when to ask for help. And I think that my story is, there's elements of success and other people see it, but for me it's that it's part of the journey to give back and to really drive and create value. I see things differently, and I'm lucky to work with a group of people that trust my instincts and my background and that of my peers to enable us to work with these great companies and grow them.
Sure. So again, speaking on that a little bit further, is there anything that you look for specifically in founders or in problems? Yeah,
definitely. The biggest thing that we talk about from our perspective as Mai Capital is coachability. I've spoken about this quite a few times with when I catch up with partners in a corporate environment. We talk about we might catch up today and you'll tell me your story, and if I provide you advice or anyone else does that we introduce you to and you ignore it, that to us says that you're not listening and you're not looking at the problem and how it could be framed differently. And it's an interesting balance between, I guess, the drive to know you're right, but also to know when you need help. And I think that in a good founder or founding team. It's really that synergy between passion for the problem and ability to take on board feedback. With that, I don't mean changing every 5 minutes, but having the conviction to back yourself and saying, well, I get that, but I don't get that, and saying when you don't understand something. We often get people saying that their acquisition cost is X or their lifetime value is Y, but they don't really understand what their business is. And I think that when they say, well, actually, look, this is what the business does and this is the problem it solves, if we start there, we can tinker with the rest of it with a founding team. It's not how you charge and how you build that's not your business. Your business is the problem you solve. And people that have that tenacity to still be focused on the long term and at least the medium term is definitely something we look for. People that come into our sort of and talk to us about wanting to take hundreds of thousands of dollars of cash off personally for early stage companies tends to be a bit off-putting, as is people that are kind of have an idea but not a business. They have I had someone recently that wanted $2 million cash for us to help them leave their corporate job so that they could build out an idea. Whereas I have something, that a couple of guys came in here and they're paying themselves $50,000 a year and they're turning over, really healthy revenue, great clients, blue chip, and the difference there is chalk and cheese. And these guys are really switched on, they're really passionate about what they're doing. And this isn't a 12-week journey. This is a multi-year, multi-market play, and the importance of the team synergy, them getting on, them being aligned, not just with the problem, but with each other. We sometimes see with founding teams, people are not on the same page. That's fine if we can flag it up front and everybody can sort of identify what would happen. And I think that's probably the biggest piece is the team and the problem.
Sure. Is there any dynamic within the team that you look for?
I think it's definitely a mix. There's always got to be sort of the visionary idea generator, but it's also the execution. And part of it can be hired, but the long term, this is why we're doing it, needs to be core to everybody. For our business at Mai Capital, it is for everyone we hire, everyone we interact with, and it's really that focus on leveraging Australian minds and technologists to take on the challenge of entering the market in China. We're very clear on creating value for Australian companies, and everybody in my office that you speak to will say the same thing. And I think that resonance and that sort of echo through the team has got to be there. And the why of why everybody turns up to work every day. And again, that's probably to my earlier point around the tech hoodie wearing startup mentality versus that we get out of bed to solve a big problem every day. We do it together. It's not always fun, but we're trying to solve this together. And that's a big remit. It's also a challenging thing for people to grasp. But again, we're not looking to cut millions of checks. We're looking to back really driven people and to solve some big problems.
Speaking of the why, obviously the US tends to be kind of top of mind for startups when they think about expanding globally. Why China?
We actually notice that a lot, and people kind of, we'll just go to the US. And I'm sure you've sort of met people that have this, you need to be on the ground in Silicon Valley, otherwise you're nowhere. Australia's only 2 hours or 3 hours in daylight savings behind China. Michael, the managing partner of the fund, he's born and raised in China and has networks that are absolutely unbelievable. Our ability to access preeminent experts globally through our 5 key sectors is I believe, unmatched. Michael's family are very, very well regarded in the logistics industry. And more broadly than that, just the access to expertise is something that I don't think many people can get. So why China? Shenzhen as a city is the size of Melbourne with the population of Australia. So think about the fact that 34 years ago, that was a fishing village. The hyper growth, the expanding middle class, the movement from a made in China to a sold in China mentality are rapidly expanding with changing tastes in a market that's only a couple of hours away. I think's unmissable. And I think that having had investments, one that's gone to the US, there's a preconceived idea that it's easy because they speak English. It is very challenging. Every state has different legislation. I know Xero have sort of encountered some challenges around that as well. It's not just one market, it's multiple markets. And I think that for us, the power of partnership is really what enables us to even talk about China. And Michael and the guys in our sort of limited partnership group and our advisors have proven an ability to take capital and ideas and scale them in either Australia and or China with a hybrid of capital and advisory. I think that's something that is far more exciting than we've sort of spoken about. And that market size is it's explosive, it's exciting, it's also prepped for change. When we're on the ground there, people talk about innovation in a way that is meaningful, and it happens. I think sometimes the challenge, and we've seen it here as well, is there's a lot of conversation, but not necessarily throughput to delivery. So I think that's really why we look to China, and part of it is our ability to leverage core relationships to deliver what we say we do, and that's sales channels, that's people that are going to give you distribution. It's putting rocket fuel on something, and that's why we talk about specificity and being good locally, because of the challenge otherwise of really not solving a problem well.
Sure. So I know you focus on, Mai Capital focuses on logistics, health, clean tech, education, and agriculture.
Yes.
Are these the particular verticals that you think can be translated from being successful locally to then being successful in China?
Yes. So we did a lot of research before we selected the key sectors we'd be in. The fund has a ESVCLP, so early stage venture capital limited partnership, that's been signed off by Innovation Australia, and it was built around the thesis of our founding partners that these are the 5 sectors that China looks to Australia for, and really Australia's traditionally been quite strong in terms of innovation and really thought-leading research. We see it as the pivotal areas with a growing middle class to leverage and solve problems beyond, I guess, e-com or SaaS. I think there's people out there that definitely do that far better than I could. Even in Australia, there's some phenomenal funds. Blackbird are really big in that space. A lot of the guys in Sydney are looking at sort of things that are in that space. But we, through our partnership group, have, and our advisors, people that are captains of those 5 sectors. Michael's family obviously being in logistics. Michael's dad's the CEO of China International Marine Container Company. So they have about a 60% global market share of the shipping container business. That gives us access to people that are leaders in healthcare that have distribution, leaders in agri that can enable things to be scaled, and education again through that broader network is something that we see as highly scalable and leverageable through both our skill base and our network.
Sure. So, apart from the obvious challenges for an Australian startup looking to expand into China, being cultural, language barriers, what are some of the less talked about challenges that Australian companies face when going globally? Or what sort of things do they need to have in place to be successful in China?
I think that the biggest thing we've seen is really the commitment to the problem, and also the fact that don't expect to go anywhere, China in particular, but also the US or the UK, anywhere in the world really, and expect to get a deal done on day one. They're built through relationships and strategic partnership. We're really big on ensuring that we line those up for people beforehand. Kate Hull from Freight Exchange is one of our investee companies. We're working with her on a strategy to tackle that market. It doesn't happen overnight, but it's around ensuring that partner and strategy is really more than just, hey, here's a plane ticket, go work it out. And I think that people underestimate the complexity of doing business globally, but also they overestimate it as well. I know that sort of is odd, but starting the conversation is the first step, and talking about what it might look like, really, and planning. I think the other piece that people would get a shock for is, like, you can be in a meeting that goes for 4 or 5 hours and meet with all different people, and it sort of all of a sudden people will be drinking shots of really strong whiskey, and then you meet more people, and it's understanding the cultural and soft differences, not just the fact that someone speaks a language that I'm not 100% across. The way in which you interact, the way in which you solve a problem is different, and we see that the most common mistake is not having the right partner, or not having a partner at all. I think Uber is a great example of that. I think we could talk at length about what's happened with Didi and how and why Uber is, I guess, why that transaction occurred.
Sure. And so with obviously you spent quite a bit of time playing various roles within the ecosystem. What for you has changed in the time from when you had your first startup?
I think that the biggest thing that I've seen is a move to being able to have conversations like this, and seeing support at, I guess, a macro level through corporate and government. The government has been more favourable historically than they are right now. There was co-matching services that are no longer there. I think that there is definitely a lot more hype on startups than there was when I was knee high to a grasshopper and trying to solve a lawn mowing business problem. And I guess in saying that, I think that there's been an element of more maturity, and the guys from Atlassian, some of the people like from Slack opening up here, the advent of really preventing the brain drain, for want of a better phrase, it has really put early stage companies back on the agenda. I don't think 5 years ago that was really done, and I think that a cohort of younger, driven people that are really looking to have that hunger to solve a problem is something that really excites me. We see technologists and ideas people from all walks of life and ages that are now ready to sort of come and talk to us about how they're solving a problem.
So obviously Mai Capital invests from late seed to Series B. What are some of the things that you look for in businesses at different stages?
I think in an earlier stage, it's really the problem they're solving, and that driven team mentality, initial clients, and a sense of where it could go. Probably a looser roadmap, but the further towards B or later stage we get, it's really imperative that some of those corporate structures are locked down. The roles are clearly defined, and the roadmap around why and what's next, it becomes more of the driving force. How you're going to enter that market, how you're going to scale, what your biggest problem is, how we can help facilitate a solution to that. I think the great thing about Mai Capital is that we're not just a capital partner, we're also looking to provide strategic advice and really open up that market into China and and broader Asia as well through our partnership group. And I think that the importance of that is when we engage with people is stage specific. We're not going to take someone that's at a sort of a late seed stage to some of our partners in logistics, because they're still formulating their idea, they're still gaining the traction that they need, and we would more focus on local introductions and validation and scaling in say Melbourne or Sydney or Brisbane, rather than taking them to Shenzhen or Guangzhou as an example.
Sure. And so for companies that are, obviously you work specifically with companies in Australia that are looking to expand into China. Is there ever a point where it's too early for people to look into expanding?
Yeah, definitely, quite often. And that's really why it's a big conversation. It's around when you are ready. We don't sort of force it onto people either. We're doing some work with a couple of guys around what that might look like, and part of it's around the preparedness of the team. It is a big challenge, but it's also phenomenally rewarding, both from a network perspective, but also watching things grow at the levels that aren't even achievable in Australia. When we're talking about single cities being bigger population-wise and single clients having access to more potential revenues, I think it's about having that bulletproof business already, or at least being clear on what it stands for and where the help's needed. That key piece around why to tackle that market now. We talk about why us, why now as a really big thing. And really the China market is big and it needs to be tackled appropriately, but it's also that you need to start with solving the initial problem and proving that you can solve it with a subset of clients, ideally in Australia or somewhere, to prove that the business and the problem is something that's big enough to be solved.
Sure. So would you say that you need to, in a sense, win the local market first? Or have significant amounts of traction here first?
Yeah, I definitely think you need to be confident in the traction you've got. We've spoken to some really great healthcare technologists and product guys that have, an element of scale, and we could really now work with them to refine that, build it out, and then take it to our partners for really rapid growth. But in saying that share of wallet that they've still got to grow initially with those sort of core clients is still there. So we're really looking for people to understand their customer and know what value they deliver before sort of trying to put the cart before the horse. Growth is attractive, but it also can mask huge problems. It's a bit of a three bears kind of thing of it being just right, but with the founders that we work with and with the teams that we back, we have a very open dialogue around when and what that looks like. We get feedback from our advisors and partners around what's happening and sort of position it early so that we can start to set things up. We wouldn't take a seed idea to China straight away. It wouldn't be appropriate and can have some really detrimental impacts on founders. Building a company is hard enough before you start trying to sort of juggle things on a multi-country basis.
Sure. What are some of the common issues that you've seen in high growth startups?
I think some of the biggest challenges in any company that's growing rapidly is one is cash flow, stretched debtors and wastage. Not really looking at who your suppliers are and why you use them, not reviewing sort of terms of how you engage with people. And I think that the biggest one is taking your eye off the ball and thinking that you are sort of solving the problem better than you were yesterday. When you look at the importance of staying close to the customers, I think that's sometimes missed when people grow too fast. I've seen it numerous times where people kind of are growing and growing and growing, and then they stop, and there's kind of this cliff because they can't service any more customers and they're losing customers. That's when you sort of have those conversations around churn. It's sometimes what I call the second sale, the importance of maintaining a customer, getting them to renew or getting them to sort of stay so that you grow what that's worth to you, or get more seats, or sell more units, whatever that metric is. But not losing sight of the customer, I think, is the biggest thing. That if people take nothing else away from it, that growth is not an excuse for losing sight of your customer.
Sure. And so looping back to the ecosystem, obviously there's been a lot of kind of spotlight that's been put into the startup space, a lot of support that the government has tried to put together. What is your, being on the VC side, what's been your read of the different incentives that are in place at the moment?
I think this is a really challenging question. I've spoken at length to a number of people, sort of mostly off record, about this. There's been a lot of talk and a lot of policy. We've not seen the changes in legislation that were promised. And I believe, as a venture capital fund and the venture capitalists, that it's a bit disappointing that there's all of this talk and there's not all that much delivery. I'm asked regularly whether we would change our business based on an announcement, and we can't. You know, we're a legislated business. We're highly regulated. We're effectively providers of a financial product, and I can't change what we do based on policy. I can change it on legislation, and I think the tax concessions, for funds are fantastic. I think that the tax exempt returns for someone like us are good, and the concessions for investors. But I think that the investment that was sort of, I guess, suggested by the NISA policy hasn't really flowed through. And I think that probably more federally than locally, but we see people get very excited and mastheads written about policy, and there's no follow-up on legislation. And I think that that's a really tough thing for us, because we're forward planning, we're looking to the future around how we grow our companies and how we support, creating jobs in Australia and maintaining growth and really creating something incredible. And I'm not sure that we're there yet. But it's a really big conversation. I don't know how we, I guess, keep it on the table. I think Startup Oz and the various other bodies are starting that conversation and maintaining it. But it is a very tough thing. Sure.
If there was one or two bits of legislation that you would like to see change, what would that be?
Well, I think something that encouraged people to not look at an early stage company as a cop-out, but really as an ability to solve problems. I don't know what that looks like, and I sort of have conversations about this a bit, but it may be a tax concession or something, so that if you leave your job at a bank, at PwC, at a law firm, to sort of take on a challenge, what that looks like. I don't have a specific idea, but I think something that encourages people to attempt and to really try and take risks, rather than having our phenomenally intelligent people going into investment banking and arbitraging stuff over cents in the dollar. I would love to see some of those minds applied to things like cancer or agricultural technology or clean tech. I think then potentially a scholarship that is somehow linked to early stage companies. It's a hard one. I'll be open to any ideas you've got.
I'll let you know if I come up with anything. But I guess putting government policy aside, what would you like to see change from the ecosystem?
I think I fortunately get to meet with some great founders, and I think part of it for me comes from having similar conversations over the last few months around who your customer is and what's the problem you're solving. They're two things that, if you ever ask me, I will ask you, because your ability to solve a problem and articulate clearly what you do, rather than sort of a 10-page, hey, we have all this cool stuff, and who is going to be a buyer or who is going to be a party that benefits, and that comes back to that value and growth conversation. I think that needs to be more front of mind, rather than it's the Tinder for food or something. I'd really like people to say, here's the problem, the tech's 80% there, and this is how we get it there. And I think that from an early stage perspective, that's something that I would like to see more of, which would encourage, ideally, collaboration. Spending some time in ecosystems elsewhere in the world, that collaboration is really, is vital. And I think that's something I'd love to see, is more phenomenal companies as a result of solving great problems, knowing customers, and being able to say, well, this guy was a CTO somewhere and he helped advise us that's why we built it in this language, not that language, and really standing behind why, rather than just kind of going, oh, well, I know C#, so I built it in C#. I think there's kind of a bit of slower upfront, but solving and framing that problem properly. Properly is a sort of subjective term, but in a way that is meaningful and scalable, will also help identify who those core customers are. How you go from one customer to 50 to 1,000, that's because that's what we do. We help you get there. But coming in, I guess, more prepped and ready for that growth is ideal.
Sure. And so on that, if people want to get in touch, follow your story, find out more, how do they do that?
They can find me on LinkedIn or Twitter, or jump on our website, so maicapital.com. There's a sort of form field down the bottom that comes through to us, and we do check it. We don't always get back to people, but we definitely look at everything that comes in. Otherwise, info@maicapital.com. That'll come through to us, and yeah, we're always keen to meet with great people.
Perfect. I'll make sure that all of those links are in the show notes. Tom, thanks a lot for your insights and your time. It's been amazing to hear all of the opportunities in China.
Thanks, Rohit, and thanks, guys, for listening.
Thanks for listening to episode 17 of the Startup Playbook Podcast. You can find the show notes of my interview with Tom, along with a curated list of tools and resources for startup founders at startupplaybook.co. As always, you can join the conversation through our Twitter account. The handle is @PlaybookStartup. Next week, I interviewed Jodie Fox. Jodie is the co-founder and chief creative officer of Shoes of Prey, which allows women from around the world to design and create their own shoes. To date, Shoes of Prey has raised over $24.6 million US, had over 6 million pairs of shoes designed on their website, and have opened offline stores with David Jones in Australia and Nordstrom in the US. In the interview, Jodie shares her insight on choosing when to leave in or take out features, building teams, working with influencers, the power of offline marketing, and following Seth Godin's Purple Cow philosophy. Don't forget to subscribe to stay up to date with our latest episodes. Thank you for listening, and I'll see you at episode 18 next week.